Welcome to another edition of Cattle Chatter. I'm Susan Littlefield on the American Ag Network. As we take a look at some of the movement that's been happening in this trade action, we're going to talk about some month end pressure. I don't know about you, but I don't know where the month of July actually went. And we're also going to break down what's happening consumer wise and, of course, tariff wise as well as those dates. Joining me today to fill in for Brad is Joe Kooima. Of course, they are with Kooima Kooima Varilek, based out of Sioux Center, Iowa. And Joe, let's kind of talk about, first of all, some month-end pressure that you might have seen in the market trade this week.
Yeah, thanks for having me on this afternoon. And yeah, you hit the nail right on the head with that. This month of July, I think the cattle market has been overbought. And officially, the second week in July, we're already talking about how overbought this market was, and just never had a deep correction. It had intraday corrections, and then it finds support. And it's not a secret why it found support, because we're still a big discount to the cash market, whether you look at the fats or at the feeders. But it seems like it came to a head today. It's always a constant worry of ours, of mine, that when you have a market this overbought and you don't have a correction to keep that market healthy, it swallows that up all in one day. And that is what happened today. For a while there, when the market was $4 or $5 lower on the fats, I was looking at Scott and I was looking at Dallas, and I'm like, hey guys, we're August cattle, we're at Tuesday. I mean, that's how big of a move we had to follow through with yesterday and stuff. And even though we're breaking down $4 to $5, we're still at a price level that we were at 48 hours ago. And there's really no correlation why the correction that we had, other than we need that to keep a market healthy. But when you pent it up so much, this is kind of what you get.
So there's other factors too, I think, that are weighing in. And before we jump into the August 1st tariff deadline looming, what about last week's reports? What repercussions or discussions did you see, Monday, Tuesday, from that information that was released on Friday?
Yep. Obviously, we flew higher with the on feed report. That placement number keeps getting missed drastically, even though we know the Mexican border is closed. So, 98 and then coming in at 92 on the placement certainly cycled some more fun buying at the beginning of the week. And when you break down the inventory report, it is a little more cumbersome to kind of go through. They're comparing some of those numbers with 2 years ago, which that's not going to be a marketing tool for me to follow that. It's like a life cycle ago. But if you do compare it to the January report, there are a few signs that we perhaps saw a little bit of rebuild, a few more calves being dropped as well. And it's hard to know exactly where that's coming from, but we've been asked that question a lot. Like, where is it? Is it happening somewhere? Where's it coming from? Not entirely sure, but that one is showing that, yes, we're starting to see some of that herd rebuilding happening. It's slow. It's probably going to be that way, just like this whole cycle has been. So I don't think this is pressure today that we're seeing from that report, but it's something that we finally have a little bit of taste that we can write down a number saying, yeah, there's a few more numbers going to show up because of the rebuilding action, but not certainly something to be overly bearish today, but something down the road that we have to keep an eye on.
Do you think in part it could be cheap feed stuff and the fact that second half of July, we've gotten some really good rains, which have been pasture rebuilding unexpected?
100%. Even going into the spring this year, all we heard about was the tree ring drought, or the cycle of an 89-year drought, and it's complete opposite of that. So we already had some moisture coming in spots, cow-calf country, that happened earlier this spring. And yeah, we got feedstuffs extremely cheap, that we wonder why these prices are so high for these replacements. And yeah, one of it's tight supplies, but the other part of it too is that there's a lot of feed coming to town come this fall. So there's another marketing program that some of these guys have to kind of go through, putting that corn through some cattle.
All right, we got to talk about the fact that we do have that tariff. And as you and I are recording this, it isn't August 1 yet, but we know that that's a big pressure factor, especially on a Wednesday and a Thursday trade, as we looked at Brazil and that beef coming in to the United States.
Yeah, that was, I think, part of yesterday's little ramp higher into the finish. I also felt like there's some margin call situation because it just exploded higher, and that was it. And then today it followed through down. Sometimes you can sense if there's an entity that had a situation like that. But yeah, the Brazil tariff's going to be was a hot item that it was going to happen, and then you get an executive order like that to happen, and then boom, off to the races. But if he had, if that had been done maybe last week when we weren't on the end of the month, I would have expected probably some follow through today with a kind of a bullish factor like that. But unfortunately, just had end of the month stuff today. And once that ball starts rolling at these price levels, the nerves are high. The nerves are already high going into this week. And then you see a break of $3, it turns to 4, it turns to 5, and briefly limit down. Yeah, the nerves are high.
And as Brad has shared with us, a lot of that beef that comes in isn't something you're going to see slapped on a grill as a cut. We're talking ground. So, what do you think that's going to do from a consumer perspective to see ground prices? I know it's kind of asking to look into a crystal ball a little bit.
Right. A little bit of a crystal ball. The way that Trump has been utilizing, these tariff threats, he has a notion to back them up, pause them, move them back 60 days, 90 days. So yeah, I would assume that there's going to be some kind of talk moving forward, maybe over the longer weekend coming up, or just the long weekend coming up. But yeah, if we have a tariff going on what we import from Brazil to put in the grind, I would expect, it's going to be passed down to the consumer, and the grindings are going to go higher, and your ground beef is going to be a little bit higher there until we can get something figured out. So.
All right, you gave me an interesting statistic before we started today's cattle chatter, Joe, and that was beef consumption up 4% year over year. It's just crazy to think the amount of beef that is moving, even with the prices that they are.
Right. That was an interesting little fact to kind of come across. And that was a big question we had here too. Like, how are the consumers handling these prices? Well, we finally got a little notation to go off of, and it's not just 1 or 2%. I would have maybe some guys would have expected to be down, but 4% higher. So we definitely have the taste for the consumer and what they want, even at a little bit higher prices. They're still kind of willing to step out, maybe of their comfort zone a little bit. But a nice, good statistic there to kind of put some of that negative, beef demand away. That we have the consumer. It's a great product. They know what they want. They're going to go after it.
So now that we can say August, what is your takeaway or early thoughts that our beef producers need to be thinking about?
Well, high nerves are going on, even today, watching this marketplace go, and we have customers calling in at 5 to 1 o'clock, and they had 242 bids in their hands. Some had 245. It's just like, that's great. That's good with last week. That's steady with last week. It's hard not to take that price. So let's not get too greedy here. Maybe there's going to be a better cash tomorrow. I don't know. And we shake this off, but it's a hard number to pass up on. I would say, that old saying of stay current, but it's just like, yeah, we are pretty current because our show lists are always small. Packers are kind of scrambling for some cattle. Our beef demand is good, but use your head a little bit. We always say, try to buy some puts or do some LRP to stay a little friendly here. I know it's expensive, but the whole schedule of what you have going on is expensive too. But like I said, use your head. Make your sales. Even if you have 46 and you're trying for 47, just take the 246. I think that's fine. So.
All right. What's the best way for folks to get a hold of you guys?
I think go to our website, kkvtrading.com, or give us a shout. We'd love to hear from you, talk with you. 1-800-358-3047.
All right. Well, Joel, thanks for pinch hitting and filling in for Brad this week.
Thank you.
All right. Joe Kooima has been joining us for another edition of Cattle Chatter.
The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.